Welcome to part 2 of our motor insurance questions and answers series, presented by InsuGuru. A private car with 1,658 cc met with an accident on December 1, 2024. The IDV of the vehicle is 500,000 rupees. The assessed loss for the vehicle is 390,000 rupees. Calculate the total claim payable based on the given bifurcations. The correct answer is 498,000 rupees. Since the assessed loss is more than 75% of the IDV, it is considered a case of CTL. The loss payable is the IDV less depreciation. A vehicle with 1,358 cc met with an accident on December 1, 2024. The IDV of the vehicle is 600,000 rupees. The date of registration is January 1, 2015. The assessed loss is 390,000 rupees. Calculate the total claim payable to the customer. The correct answer is 276,000 rupees. Considering the age of the vehicle is 9 years, the loss after depreciation is 277,000 rupees less excess 1,000 rupees, resulting in 276,000 rupees. What happens to the policy in the event of the death of the insured? Choose the correct option. The correct answer is both B and C. The policy remains valid for 3 months or until expiry, whichever is earlier, provided the legal heir applies for the transfer. How is IDV fixed for a motorcycle policy renewal with an IDV of 30,000 rupees and 20% NCB? Choose the correct option. The correct answer is the manufacturer's listed price less 15% depreciation. As per GR 8, IDV is based on the depreciation applied to the manufacturer's listed price. For which policies is the Automobile Association discount applicable? Choose the correct option. The correct answer is private car and motorcycle policy. The discount is specific to personal use vehicles such as private cars and motorcycles. A vehicle runs over a stone, leading to tie rod breakage and further damage. What claim is payable? Choose the correct option. The correct answer is that the claim is payable for damages, including the tie rod. Tie rod breakage is a result of the accident and is therefore payable. Mr. Shivansh has imported a Hummer and hasn't paid the import duty. He wants to insure the car. Choose the correct option. The correct answer is that the car can be covered with an additional premium of 30%. As per GR 37, 30% of the premium is loaded for vehicles without custom duty. An insured died on December 31, 2009. The policy covered the vehicle from July 1, 2009, to June 30, 2010. The vehicle met with an accident on March 10, 2010. What is your decision? Choose the correct option. The correct answer is to ask the heir to apply for transfer and pay upon completion. Don't forget to like the video, subscribe the channel and share it with your friends. Which vehicles do not carry overturning risk under a standard cover? Choose the correct option. The correct answer is mobile drilling rigs. Mobile cranes, mechanical navies, shovels, grabs, rippers, and excavators do not have overturning risk in standard cover. An owner-driver is traveling in his car but not driving at the time of the accident and dies. What is the amount payable under the PA cover for the owner-driver? Choose the correct option. The compulsory personal accident cover of 15 rupees lakhs is available to the owner-driver while driving, mounting, dismounting, or seating as a co-passenger in an insured vehicle. The knock-for-knock agreement evolves out of the rule of subrogation, simplifying settlements of insurers to their insured vehicle without using subrogation against each other. Discount for anti-theft devices is not applicable for motor trade policy. If a person has 2 cars and opted for compulsory PA cover under one policy, the claim is not payable if the accident occurs in the car without the cover. The PA to owner-driver cover is vehicle-specific and valid only for the insured vehicle. The validity of a driving license to drive a commercial vehicle with hazardous goods is 3 years as per the new Motor Vehicle Act. Under the India Motor Tariff 2002, all mentioned policy types are available. Liability only plus fire, liability only plus fire plus theft, and package policy. If a government requisitions an insured vehicle during an accident, the insurer pays over and above the amount paid by the government. Intimation of a claim must be given immediately upon occurrence. After the sale of a vehicle, the no claim bonus, NCB, can be transferred to a new policy within 3 years from the sale date. All statements are correct as per motor tariff guidelines. Policies cannot exceed 12 months, short period covers are allowed, and short period covers for liability only policies are not allowed. A fresh proposal form is not required for IDV change at renewal with the same insurer. For IDV adjustments during renewal with the same insurer, a fresh proposal form isn't required. What is the survey fee payable for a motor claim estimate of 10 rupees lakhs and SI of 5 rupees lakhs? The survey fee payable is 4,900 rupees, calculated based on the SI or claim estimate, whichever is lower. Calculate the loss payable by the insurer for a private car involved in an accident with specific details provided. The loss payable is 10,600 rupees, considering the repair invoice, depreciation, and salvage value. Thank you for watching. We appreciate your support. Visit our page for more information.